What if the reason you're losing in forex isn't how you trade, but how much you trade? 5 trades, 10 trades, sometimes 15, glued to the screen, jumping at every candle. Convinced that more trades means more opportunity. It doesn't. More trades means more decisions. More decisions means more chances for your emotions to run your account into the ground. The most consistently profitable traders share one habit nobody talks about. One good trade a day. Then they stop. Today I'll show you exactly why. Not just the logic, but the psychology. Because the math is simple. It's your brain that's making this hard. And I'll show you the one moment, every session where most traders destroy a perfectly good day. It happens at a time you'd never expect. See if this sounds familiar. You sit down, market's open, you're focused, you spot a setup. You take the trade. It loses, something shifts. You're not focused anymore. You're frustrated. And frustrated traders don't look for good setups. They look for revenge. So you take another, slightly lower quality. But you're sure about it. That loses too. Now you're down twice what you planned, chest tight, staring at the chart like it owes you something. And you take another trade. Not because the setup is there, but because you need to get back to flat. That's not trading. That's a spiral. It has a name. Revenge trading. And it is the single most common reason funded accounts get blown by traders who actually know what they're doing. The problem was never the first loss. It was trade number 2 and 3 and 4. More trades means more chances for your emotions to take the wheel. And emotions don't trade your strategy. They trade your fear. They trade your ego. Your fear and your ego have a terrible track record. Here's what most trading educators never mention. Every trade costs you more than just pip risk. It costs you mental energy. There's a concept in psychology called decision fatigue. The more decisions you make, the worse your decision-making gets. Not because you get dumber, because your brain burns through a finite resource every time it chooses. Judges give harsher sentences later in the day. Doctors order unnecessary tests in afternoon sessions. Elite athletes deliberately cut their daily choices to stay sharp for the moment that matters. Now think about what you're doing. 10 trades. Each one, analyze, decide, manage, close. Each one draining the same reserve. Each one leaving you a little more depleted. By trade number 7, you are not the same trader you were at trade number 1. Slower, more impulsive, rationalizing setups you'd have rejected at open. That's when accounts die. Not in the morning, in the afternoon, when your brain is empty and you're still hunting for one more trade. One trade a day fixes this. You bring everything to one decision, not grinding through fatigue, fresh, for the only trade that matters. Here's the framework. 3 pillars, write these down. Pillar 1, you raise your standards because you have to. 10 trades a day, a mediocre setup is good enough. The bar is low because opportunity feels endless. 1 trade a day, everything changes. Now you're hunting for the best setup of the day. Not the first one, not a decent one. The one. Cleanest price action, clearest trend, most obvious entry. 1 bullet, you're not wasting it. That shift in standards is worth more than any indicator you'll ever add to your chart. Pillar 2, you stop fearing losses. Here's the paradox. The more you trade, the more you need to win each trade, because losses stack faster. Needing to win makes you emotional. You cut winners early. You hold losers. You move stop losses because you can't be wrong. 1 trade a day reframes everything. Risk 1%. Lose the trade, you're down 1%. Not 5, not 8, 1. 1% is recoverable. 1% doesn't break your psychology. 1% lets you come back tomorrow with a clear head. Pillar 3, your wins compound. 1 high-quality trade at 1 to 2 or 1 to 3 risk-reward. The math works even with a win rate below 50%. Read that again. You can lose more trades than you win and still be profitable if your winners are bigger than your losers and you're not diluting your edge with junk setups. 10 random trades gives you 10 chances to be wrong at double the loss. 1 great trade gives you 1 chance to be right at triple the gain. Over a month, those numbers don't even compare. I promised you this. The exact moment most traders throw away a perfect day. It's not after a loss, it's right after a win. You close the trade, it's green, the dopamine hits, brain is buzzing. And instead of logging off, then you think, I'm sharp today. Let me find one more. That's it. That's the moment. Because now you're not trading from clarity. You're trading from confidence. And overconfidence is just as dangerous as fear. It makes you see setups that aren't there. It makes you size up when you shouldn't. It makes you hold losers. Because surely a trader having a day like this can't be wrong. Psychologists call it the hot hand fallacy. The belief that a streak changes your probability. It doesn't. The market doesn't know you just won. The market doesn't care. Every trade is its own event. Winning one trade does not make you more likely to win the next. One trade a day removes the trap. You won. Today is done. Close the platform. Protect the gain. Protect the mindset. That's discipline. And discipline is the only edge that compounds. Here's what nobody tells you about trading less. It gets easier. Not because the market does. Because you get better, faster. One trade a day. Reviewed at end of session. One data point. Crystal clear. You're not sifting through 14 messy trades trying to figure out what went wrong. You know what went wrong. Because there's only one thing to look at. After 30 days, 30 clean journal entries, 30 setups chosen deliberately, 30 moments of discipline stacked on each other. Standards rise. Patience deepens. Emotional reactions shrink. You stop needing the market to validate you. Because you already validated yourself by waiting for the right moment. The traders who make money long-term are not the ones with the best indicator, not the fastest execution. They're the ones who outlasted their own worst impulses long enough for their edge to play out. One trade a day is how you outlast them. Here's how to start tomorrow. 1. Set your session window. London Open or New York Open, pick one. When it closes, you close with it. No exceptions. 2. Define your setup. Before the market opens, write down exactly what you're looking for. What pair, what condition, what trigger. If it doesn't appear, you don't trade. Period. 3. One trade, one outcome. Win or lose, you're done. Close the platform. Go live your life. Your account will thank you by the end of the month. You're not losing because you don't know enough. Not because the market is against you, not because your strategy is broken. You're losing because you trade too much, and every extra trade is another chance for the worst version of yourself to make a decision. One trade a day. Higher standards, protected mental energy. No revenge spiral. No hot hand gambling. One clean data point. Every day. Less is not giving up. Less is precision. If this hit differently, subscribe. Next week, I'm going into exactly how to find that one trade, what to look for, what to ignore, and how to walk away when nothing sets up. That last part is harder than it sounds. There's a specific window in the forex session where the highest quality setups appear. Most traders are too early or already too fatigued by the time it opens. That's the next video. I'll see you there.